Hi everyone, my name is Dan Huang, and today I'll be presenting my research on evolving trends and challenges in cyber insurance. We are going to walk through what is happening in the cyber insurance market, why systemic cyber risks are becoming harder to insure, and how public-private partnerships or PPP could help strengthen the global cyber resilience framework. In recent years, cyber attacks have grown rapidly across governments, enterprises, and critical infrastructures. According to IBM's 2025 report, the average cost of a breach has reached 4.44 million, while Allianz report that premiums had risen from 25 to 35% in the last 3 years. Cyber insurance has become essential for transferring financial risk, but the industry faces major challenges, especially limited data, insufficient insurer capacity, and growing systemic exposure. These challenges form the motivation for my research. The global cyber insurance market reached 15.5 billion in 2024 and is projected to reach 16.6 billion in 2025, according to Swiss Re. Swiss Re is one of the world's leading reinsurance companies based in Switzerland. However, as cyber risks increase in scale and complexity, traditional insurance mechanisms struggle to keep up. Systemic cyber risks such as widespread cloud outage or supply chain attacks can affect thousands of organizations at once. Private insurer alone cannot absorb the catastrophic losses that could result from such events. This is why public-private partnerships have emerged as a promising solution to protect both the market and the society. Systemic cyber risks are large-scale incidents that impact many organizations simultaneously. Examples include cloud provider outages, global ransomware campaigns, or major supply chain compromises. Munich Re, also one of the world's largest insurance company based in Germany, describes that these risks as behaving similarly to natural disaster, except they propagate digital and much faster. Traditional risk model and pricing mechanism have a hard time capturing correlated cyber losses. As a result, insurers face growing uncertainty and increasing pressure on their capacity. The Organization for Economic Cooperation and Development has emphasized the need for collaboration between the public and private sectors. Their recommendation includes establishing national funds for severe cyber incidents, creating government-backed reinsurance layers, improving mandatory data transparency and reporting standards. The goal is to reduce the protection gap, meaning the gap between economic losses and what insurers can realistically cover, and build long-term sustainability. We are seeing several key global trends. Demand is rising across enterprises, governments, and critical infrastructures. Coverage is evolving from basic liability to more sophisticated protection, such as business interruption and digital supply chain insurance. Organizations with stronger cybersecurity controls now receive lower premium and better coverage. Modeling efforts increasingly focus on catastrophic and correlated cyber events. These trends highlight both the growth of the industry and the challenges ahead. This chart illustrates the overall market growth from 2020 to 2025. We can see a steady increase as more organizations recognize the need for cyber insurance. However, the growth also reflects rising loss ratio, more complex attack, and evolving regulatory requirements. which put pressure on insurers to price the policy more accurately. In terms of pricing, premiums surged from 30 to 50% between 2021 and 2023 and now have stabilized at moderate increases of around 25 to 35%. High-risk sectors like healthcare, finance, and cloud-dependent companies continue to see higher premiums. Regarding coverage, insurers are introducing more exclusions, especially involving nation-state attacks or systemic outages. Deductible for ransomware and business email compromise are also increasing. Sublimits are more common to manage exposure, especially for cloud outages and forensic costs. These adjustments show how insurers are trying to balance risk while maintaining profitability. World Economic Forum's 2024 reports warned that systemic cyber risk could even trigger large-scale economic instability. A majority of cybersecurity experts, about 74%, believe PPP is essential, and policymakers heavily support government involvement. Swiss Re argues that cyber risk challenges the traditional definition of insurable risks due to limited historical data and a high level of correlation between events. Overall, the literature shows that data transparency, reinsurance capacity, and public-private cooperation are key to sustaining the market. Even though PPP models are widely discussed, implementing them in reality remains difficult. Key challenges include the lack of clarity around how national compensation funds should operate, disagreements about how liability and costs should be shared, uncertainty around how much financial guarantee the government should provide. Experts suggest structural tier liability, where insurers cover predictable losses and the government steps in for catastrophic layers. From my investigation, several findings stand out. First, large cyber events like supply chain attacks and cloud outages behave very much like natural disasters. Because of this, traditional reinsurance structures don't work well, and the industry needs to shift toward PPP-style risk-sharing model, as highlighted by Munich Re. Second, Swiss Re emphasized that public institutions must play a bigger role in strengthening cyber resilience and improve data transparency. Third, the OECD recommends developing national data sharing frameworks and government-backed reinsurance schemes to support the market. And finally, countries like UK, Germany, and Singapore have already started implementing cyber risk pool, where both private insurers and government share systemic cyber risk. These findings collectively show a global movement toward PPP-based solution. In my analysis, I found that the cyber insurance ecosystem requires a more structured and resilient framework. To address this, I propose a PPP cyber resilient framework consisting of three main pillars: financial capacity, data transparency, and policy alignment. These pillars support each other and collectively enable a sustainable cyber insurance environment. The first pillar focuses on building financial resilience. Cyber risk pools, shared by insurers and supported by the government, have absorbed extreme systemic losses. In this model, the government acts as an insurer of last resort for catastrophic events. This mirrors the catastrophe reinsurance pools used for natural disaster, and research from Lockton Re shows such pool can stabilize the market and maintain the affordability. The second pillar is data transparency. Accurate pricing and risk prediction are nearly impossible without consistent data. A national cyber incident repository would standardize how incidents are classified, for example, ransomware, business email compromise, data leak, or cloud outage. This database would combine information from insurers, search teams, and regulators. In turn, it would support better modeling, early warning system, and more competitive pricing. The third pillar is policy alignment. Insurance regulations should be in sync with national cybersecurity strategy. Unified incident reporting laws help reduce ambiguity and ensure receive adequate information. Minimum cybersecurity standards for coverage help reduce moral hazard, meaning organizations are encouraged to maintain strong defenses instead of relying solely on insurance compensation. In conclusion, cyber insurance is becoming an indispensable tool for managing digital risk, but the industry is under severe pressure due to systemic risks and data limitations. Traditional insurance approaches are no longer sufficient for correlated cyber events. Public-private partnerships offer a promising path forward by strengthening financial capacity, improving data transparency, and establish consistent national policy. With coordinated effort, we can build a more resilient and sustainable cyber insurance ecosystem. Here are the references that I have used. Thank you for listening. If you have any questions, please post it.